Should you invest in today's company? Or maybe you should invest in its main competitor, or maybe just go with the default and invest in the S&P 500. We're going to analyze today's company and compare it with its two alternatives. We'll analyze the company's business first to see how good or bad it is, and see whether it's better than its main competitor, and is there a better business than the components that make up the S&P 500. Then we'll analyze the company's technicals to see how good it is, and see whether it's better than its competitor and if the technicals are better than those of the S&P 500. After that, we'll check out the company's fair price. And finally, we'll see how well the stock has performed over various periods of time versus its industry and against the S&P 500. Let's dive in and start with the 9 metrics that make up its business. Growth. We're looking at the projected earnings growth for the next 5 years. We ideally want the company to have a higher growth rate than its competitor and the S&P 500. Near the bottom right of the screen, you'll see a point system that will add up at the end. P/E ratio. This determines how much speculation is built into the business. We ideally want a low P/E ratio, meaning there's less speculation around the stock. PEG ratio. This tells us how expensive a stock is relative to its growth rates. We ideally want a PEG ratio below 1, but it's a PEG below 3 that's good enough. Price to book. This tells us what investors think of the future growth prospects of the company. We ideally want the price to book lower than its competitor and the S&P 500. Returns. This tells us if a company is utilizing its assets efficiently to grow using return on assets, equity, and investment as our measurements. Ideally, we want these returns higher than the S&P 500. Dividends. How much are you getting paid to own shares in the company? We're comparing the yields between its competitor and the S&P 500, where we prefer a higher yield. Quick ratio. This tells us whether the business can pay off its short-term debt quickly using any assets that can quickly turn into cash. We want that ratio to be as high as possible. Debt to equity. This shows how much relative overall short and long-term debt the business holds relative to its equity. We want this ratio to be low, although for some industries that may not be the case. Profit margins. This shows us the percentage of revenue kept in the business as profit. Ideally, we want a business with a high profit margin. So let's put everything together and score our business. Here's a recap of the 9 metric points for the company, its competitor, and the S&P 500. The higher the total points, the better the business is in comparison to the other 2 alternatives. But remember, this just measures the business. This doesn't say anything about when you should buy the stock. Next, let's look at the company's 3 technical metrics. The 200-day simple moving average. What you see is the percentage the stock is trading above its 200-day moving average. The 200-day determines near-term stock trends. Ideally, we want this trend above the 200-day. Relative Strength Index. The RSI is a technical way to measure whether a stock is over or undervalued. Ideally, we want the RSI lower than its competitor and the S&P 500. Short float. This is the percentage of shares used by investors to drive the price of the stock down. For the S&P 500, we use the average of the 10 largest components of the index. Ideally, we want this percentage to be low. So let's put everything together and score our technicals. Here's a recap of the 3 metric points for the company, its competitor, and the S&P 500. The higher the total points, the better the technicals are in comparison to the other 2 alternatives. This just measures the technicals. This doesn't say anything about the business or its fair price. Before we continue, join my Patreon where you get access to every company I've analyzed so you can easily compare between each. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. So then let's get our company's fair price. Fair price. What you see here is the company's current price, my fair price, and how undervalued or overvalued the stock is relative to its fair price as a percentage. The color coding is a quick way to determine the company's valuation. That's a lot of data, so should you invest in the company or one of its two alternatives? Here's what all the numbers tell us. Here's my recap of the best business of the three, my recap of which of the three has the best technicals, and the company's fair price. Putting everything together, I give you my overall grade for today's company. Lastly, let's check out performance. Performance. I don't usually put performance as part of my analysis, but it's an interesting thing to show so you can see how today's company, its industry, or the S&P 500 has done over the near term and the long term. Remember to check out my Patreon. Invest wisely, and as always, take care of your money.